Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in those dense financial reports. Today we're diving into Vimeo's latest finding, and let's just say it's a bit like watching videos on a slow internet connection. Things are getting interesting. So what exactly are we looking at here? It's Vimeo's quarterly report, typically filed every 3 months. This one covers their performance up to June 30, 2025. Think of it as a progress report for the company. Now, before we get bogged down in the numbers, if you like decoding these corporate secrets, hit that subscribe button. And hey, we've got a great community over on Discord to keep the conversation going. Link in the description below. Let's jump right into the heart of it, their balance sheet. This is like a snapshot of what Vimeo owns and what it owes at a specific moment. Looking at June 30, 2025, we see their total assets are around $620 million. So a slight dip there. Their cash position is quite important. On June 30, 2025, they had about $303 million in cash and equivalents. That's down from $325 million at the end of 2024. It's not a massive change, but it's worth noting. Now, on the other side of the balance sheet, we have their liabilities and shareholders' equity. Their total liabilities are around $29 million on June 30, 2025, which is pretty stable compared to the previous year. What's interesting is their shareholders' equity, which represents the owner's stake. This figure also saw a decrease from about $48 million at the end of 2024 to around $391 million on June 30, 2025. Moving over to how they actually performed operationally, this statement of operations tells us about their revenue, their costs, and ultimately if they made a profit or a loss. Let's look at the 3 months ending June 30th, 2025. Their revenue was about $104.6 million. That's a tiny increase compared to the same period in 2024, where it was $104.3 million. Barely any change, which is a bit concerning for a growing tech company. Their cost to generate that revenue, the cost of revenue was $23.1 million in this period. This means their gross profit, the money left after paying for the direct costs of their services, was about $81.5 million. That's almost identical to the $81.7 million gross profit in 2024. So margins stayed pretty much the same. Now, let's talk about the big spending areas: operating expenses. This includes research and development, sales and marketing, and general administration. For the 3 months ending June 30, 2025, R&D was nearly $30 million. That's up from about $27 million in 2024. They're investing more in building out their products. Sales and marketing also went up from about $27.7 million in 2024 to almost $30.3 million in 2025. They're spending more to get the word out and acquire customers. However, general and administrative costs actually went down from $19 million in 2024 to about $17.2 million in 2025. This is partly due to a significant drop in stock-based compensation, which often happens when executives change. So what's the bottom line for these 3 months? Their operating income, the profit from their core business operations, was about $3.7 million. That's a sharp drop from over $7.4 million in the same period of 2024. Even though revenue barely moved, their spending went up, eating into their profits. Let's look at the 6-month picture for the first half of 2025. Total revenue was about $207.7 million, down slightly from $293 million in 2024. Again, not a sign of booming growth. Their gross profit for the first 6 months was $160.5 million, a decrease of about $2.7 million from the previous year. And those operating expenses, they jumped significantly from about $153 million in the first half of 2024 to over $162 million in the first half of 2025. This increase was mainly due to that higher investment in R&D and sales and marketing we saw. The result? Their operating income for the first 6 months of 2025 swung from a profit of over $10 million in 2024 to an operating loss of almost $2.4 million. Ouch. They spent more and made less overall. Let's dig into the revenue breakdown, because this is where we see the story. Their self-serve segment, which is basically what you and I would use online, saw revenue drop by 1% for the quarter and 3% for the half year. This is mainly because they have fewer subscribers. The number of average subscribers in self-serve fell by 11% for both periods. That's a significant chunk of their customer base shrinking. However, their average revenue per user, or ARPU, did go up by 11% for the quarter and 9% for the half year, meaning the customers they do have are paying a bit more. The Vimeo Enterprise segment, their higher-end offering for businesses, painted a much brighter picture. Revenue here jumped 25% for the quarter and 28% for the half year. This is driven by both more customers and those customers spending more. This looks like their growth engine right now. Their OTT segment for streaming services saw a slight revenue dip of 3% for the quarter and 5% for the half year. It seems like ARPU is down here even though their subscriber count grew a bit. And then there are add-ons like extra bandwidth, which saw pretty big drops, down 20% for the quarter and half year. This is likely due to lower demand for those specific services. Their other category, which includes older products they're phasing out, naturally declined significantly. Bringing all this together for the first half of 2025, total revenue was down slightly. This was largely due to that 20% drop in add-ons and the ongoing decline in self-serve subscribers, which wasn't fully offset by the strong growth in Vimeo Enterprise. Now let's talk about adjusted EBITDA, a measure that tries to show the performance of their core business by removing certain non-cash and one-time items. For the 3 months ended June 30, 2025, it was about $10.9 million. That's a big drop from $16.3 million in 2024. And for the first 6 months, it fell from $28.5 million in 2024 to $15.7 million in 2024. And for the first 6 months, it fell from $28.5 million in 2024 to $15.7 million in 2025. This shows that even when you strip out some of the accounting fluff, their core business profitability is taking a hit. Beyond financials, companies often disclose legal matters that could affect them. Vimeo mentions a few. There's the EMI Capital Records copyright infringement case that's been ongoing for years. It seems like they've been fighting this in court and recently had a ruling from a court that affirmed a judgment. It's pretty complex, involving copyright claims related to user-uploaded videos. They also have litigation with RTI, another set of copyright infringement claims, this time originating from Italy, but pursued in the US as well. This one has seen a lot of back and forth in the courts. Significantly, they mention entering into a settlement agreement in June 2024 to resolve these lawsuits, which they state did not have a material impact on their financial condition. That's usually good news when a big legal fight gets resolved without a major financial blow. There's also litigation with Sony, Universal, and Warner in Milan, Italy, again related to copyright infringement and their takedown process. The court hearing for this one has been rescheduled for October 2025. On the financial strategy side, Vimeo completed a stock repurchase program by March 2025, buying back shares to return value to shareholders. Then, in April 2025, they authorized a new buyback program for up to $50 million. This shows they are still planning to use their cash to reduce the number of outstanding shares. Looking at their liquidity, or how easily they can access cash, Vimeo reported having about $303 million in cash and equivalents and no debt as of June 30, 2025. They seem confident this cash plus what they expect to earn will be enough to cover their needs for the next year. However, they also mentioned that if demand for their products slows or unexpected costs pop up, they might need to raise more money, either through debt or selling more stock. And they acknowledge that getting this extra money might not be easy or might come with unfavorable terms. Now, always important to look at the risks. They've updated their language about how macroeconomic and political uncertainties could affect them. Things like inflation, interest rates, and geopolitical instability can all hit their customers, which in turn hits Vimeo's revenue. They explicitly state that in an inflationary environment, they might not be able to raise prices as much as their costs go up, which would hurt their profits. This is a pretty honest statement about the current economic pressures. Okay, so let's put on our analyst hat. Vimeo is clearly in a transition phase. The decline in their core self-serve customer base is a major concern. While they are growing their enterprise business, which is great, it's not yet enough to offset the softness elsewhere. The increase in R&D and sales spending signals they are trying to innovate and capture market share, but it's currently impacting their profitability, leading to lower operating income and adjusted EBITDA. The legal battles seem to be mostly behind them, with a settlement in one major case, which is a positive. Their strategy seems to be shifting more towards the higher value enterprise segment. The question is whether they can speed up that transition and reverse the trend in their self-serve business. The fact that they're talking about potentially needing more funding and the impact of inflation on their pricing power suggests they're facing some headwinds. They need to show a clearer path to consistent profitable growth. So, what's my take? Vimeo is facing a mixed bag. Strong growth in enterprise is a clear positive, but the shrinking self-serve user base and rising expenses are definite weaknesses. The company's direction is adapting, but the execution needs to deliver more consistent financial results. Alright, that's our deep dive into Vimeo's latest financial report. What do you think about these numbers and what they mean for the company's future? Let us know in the comments below. If you found this breakdown helpful, please smash that like button and subscribe for more. And don't forget to join our community on Discord for more insightful discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.